Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of which relied upon as any form of personal advice. FP Markets does not know your personal scenario, nor your personal financial goals, and therefore none of which relied upon as any full advice at all. Is just general in nature only. There's this idea at the moment that the US dollar may have a pivot and start to move away from being that absolute core strength that has been going on for almost a year now. The thing is though, I want to probably point this out, there's nothing we can really see that would suggest that's the case. Yes, we have seen a really decent jump away of 4 cents or so in something like cable, but that's more down to the fact that the policy flip going on from the UK government is there, and that charge towards parity has taken a pause as maybe the issues and guilt and the financial instability that it was creating has sort of eased away. But I think you need to go back to your first principles, which is looking at differentials. And at the moment, concentrate on the Fed. The Fed is making it absolutely abundantly clear that inflation is the only story that they care about, and therefore safe haven assets are key to everybody's investment decisions, and that therefore very much means the most safe haven asset out there in FX is the US dollar. And that hasn't changed. And if you listen to faces like Neel Kashkari, you listen to Lisa Miller in terms of what she's now currently saying as a new board, if you look at also what's coming on from someone like Loretta Meister, they're all singing from the same hymn sheet. And that is the idea that inflation has not peaked, that there isn't any sign at the moment that in the US inflation is easing off, and that at the moment their next point of view is that rate rises are not only going to come, they're going to be held at a tightening level for a period of time. And their view on a period of time is all of 2023. So none of that suggests that the US dollar should reverse. It also therefore means that real yields are going to continue to be up. So despite having a look at things like euro dollar, which is now at about 97 cents, if you look also at the Aussie, 64 cents, and all those in between, the one to really concentrate on here is dollar yen. And the reason for dollar yen being the concentration to have a look at, we know the Bank of Japan is defending at 145. And it's there at the moment, and it's been sitting there now on and off for about 10 days. And the question you've got to ask is, who's going to win? Is it the momentum and that whole real yield trade, and therefore towards the US dollar, or does the BoJ defend strong enough to continue to hold it at 145? That, from our perspective, is the most interesting question going on in FX.